Good evening, everybody. Welcome to another MK live trading video. Today we're going to cover the gold pit. So if you don't know, the gold pit opens at 8:20 a.m. Eastern, Monday through Friday, and it closes 1:30 p.m. So what you're looking at here, we've got the order ladder on the right, the price ladder. We've got the auction Vista heat map in the middle, and we've got our thermal or our delta meters on the left. Essentially, what you're focusing on is the accumulation and continuation identified within the price action during a fundamental risk exposed time frame. So what I mean by that is at this hour at around 7 o'clock this morning, October 10th, there was ECB morning minutes going on. So what that means is the European Central Bank was talking about quantitative easing and developing a more strategic stimulus easing plan into the coming fiscal year. And essentially what that all fancy stuff means is that they are trying to make money cheap, cheaper than it already is. And it's already very cheap to borrow money as a business. So I won't get too much into that. All in all, when bankers, particularly central bankers, start to have discussions regarding money, of course, the markets are going to have reactions. So gold being a currency in and of itself, there's going to be volatility developing within this fundamental exposure. And my goal here as a trader is to find opportunity. Essentially, what we're seeing is a bullish continuation developing into the beginning of the pit open. And this is something that I've identified before trading the pit open. And typically what I've noticed is there's a pattern. And the pattern that I've identified is that the traders with influence, the traders with control, with enough size to move the market, will typically do just that. They'll push it the way they want it. They'll trap certain buyers and sellers who may be unsuspecting, like retail, and then end up flushing them with exorbitant amounts of selling pressure. So watch here how we have this bullish continuation off of our current long position, which is 3 contracts at the 12.6. We're looking to get rid of one now at the 13.5s to take some profit. We're looking to get rid of another one very soon because we're seeing this thing move very quickly. Take note, also, this is in sped up time. It doesn't move this fast, but it still moves fast. We are looking for these 14s, 2s. We're trying to make sure that we're locking in those profits early in the day. And since we haven't really identified any patterns that we can really sort of lean on, there needs to be a profit. There needs to be a capital preservation and taking at least a little bit of profit on 3 lots is important to me as a trader. So the last lot gives me the opportunity to run it to the move that I'm looking for. You can see that I've got a limit sell at the fire line, which is essentially a retracement of the prior yearly swing high from 2013. And if you're not familiar with certain Fibonacci technicals, essentially all that means is that it's a well-respected level that's revisited quite often and acts sort of as a magnet. So we're going to watch the bulls try to press it to that zone. You can see that in the heat map here, we have quite an accumulation of what looks to be like buyers absorbing sellers. And that's what's giving conviction to this overall move. Now, it's quite interesting to watch because I'm watching the sellers develop a very sort of strategic, sneaky way of bringing the buyers into thinking that this is going to be a long-term continuation. Sure, it's going to go up probably to the 16s, but is it going to go up to the 20s or the 30s like most retail thinks? Probably not. In fact, it's probably going to find support much lower than where it's currently trading at. So this is the perfect opportunity to accumulate that liquid and use it to make a profit on the way down. And first and foremost, we're going to basically wait patiently to ensure that unless the order flow starts to change its direction, unless sellers can prove that they're now in control, we're going to remain in this long. And there you see there's the algorithm, and we're going to pause the video, and you can see on a traditional on a paused depiction of this picture, you can see that there is no selling going on. Look at this giant gap here next to the bid that is filled with quite a few buyers. And you look at the bid over here right now, or the offer that's currently trading in the video, there's a good balance, and here there's nothing. So in literally a nanosecond, the price went up to 1650s, 1650, 2 cents below our target. You can't make this stuff up, folks. Okay, so going back to the video, now that the algorithm's fired the initial move that we were expecting. And let me point this out to you guys on a traditional candle chart so you can see. So essentially, this is a 15-minute bar chart. You can see that, we caught that little bar at the beginning of the morning into the pit lineup. We pressed into the candle wick that you saw there, this crazy move that came out of nowhere, trapped all those buyers, and then we cut in reverse off of the realization that there was a bait trap occurring to pull sellers back into control. So if we go back to our video here, we can see that as soon as this move occurs, buyers start flooding in because they're like, oh my goodness, it must be going to the moon. It must be going back to the 1560s. We're going to 1600 soon, right? And we go ahead and remove our limit order because we're probably not going to make it back up there. We go ahead and get filled on the short side after some confirmation from this current print on the right. We actually leave our limit there in case we do make it back up, but we are going to mark it into it because there's really no time. And you can see that based on how quickly it's moving here. And this is a combination of the pit opening and the initial ECB minutes that's causing this volatility. And actually, at this very moment in time, there's a CPI report coming out, and that report ended up being fairly neutral. So there were some numbers that could have been perceived as bearish within it, and I think a lot of retail got stuck trying to get long gold, thinking of that logical mindset of, okay, there's Trump, there's trade wars, et cetera, et cetera. But actually, this provides a contrarian opportunity on an intraday basis. And if you're not familiar with contrarian trading, it's more often than not then professionals are using contrarian mindset to create those sort of vacuums and traps. So essentially, you can see that we've now broken our structure to the upside, and we're gaining momentum to the downside, and the sellers are in control, and the buyers were trying to press very hard because they think, okay, this must be just a pullback continuation, and the amount of pressure that we're putting on them, you can see on the left, is substantial. You can remember that we got in at 12.6, 12.7 for the long, so that's our key level to watch there. As soon as we break that, we're kind of exposing the downside continuation. And obviously, if you know, gold settled today at the sub 1500 level. So we managed to catch that move off of what you're seeing here. This is the beginning of the core position. We ended up taking 3 lots down overall. We're going to keep this video short, though, and just show you guys how the beginning of it developed with these gaps here and these absorption sort of spheres that you see on the heat map. And you can see there's quite a bit of the red ones, and essentially you can see that buyers are starting to capitulate. So something to take note of in a situation like this, you don't just want to think that this strategy is going to work for every market. You have to be cognizant of the fact that every market has a different behavior and nature to it. And if you watch some of my live streams, you've seen me trade crude oil, you've seen me trade natural gas, you've seen me trade profitably on those. And the way that I react to the levels within those is very different. So just make sure that you understand that when you watch these videos and you start to develop an idea of what it is that you want to trade. So we can see that we've broken structure heavily. We have a lot of pressure against this shelf here. And this shelf here is essentially a volume node on a large time frame chart that signified support based on how much liquidity was traded at that support. And now that we've broken that liquidity, it's like opening the floodgates. It's essentially saying, look, there's no way that buyers are going to be able to hold this fort down at the speed that the flush is occurring. And I'll show you that here on the actual time price opportunity chart. And the time price opportunity chart is showing us the nodes or the clusters of liquidity and how those act as magnets. So you can see that the arrows that I just drew were all magnets of liquidity that we revisited throughout the trading session today. And here's the bottom at those sub 1500s. And the ledge was at 1050, which you can see is above the square on the right-hand side. And that is where we confirmed the initial bearish continuation to the downside with extensive pressure. And essentially, what this strategy is useful for is if you're trading any sort of commodity that has a consistent liquid time of day where there's, a pit that opens, you can really find strong moves that you can build into. And also, like I mentioned before, the patterns become identifiable. So you can see this pattern here off of that fire line we identified that we rejected pretty much 2 cents away. And then sellers just started reloading, just throwing it down, just no, room for the buyers to even consider. We hit the shelf. Coincidentally, we respect that shelf. We bounce, we absorb more retail liquidity, and then, of course, crank it back down to our next level. Once we hit these 09s, I knew we were going to see a deceleration of volume. Everyone was going to kind of grab onto their hats and make sure that if they were long before and got squeezed out, that they can get in short and make back some of those profits. And you can see that it kind of flattens out, creates some absorption. And then, as you know, if you saw how gold traded today, we hit that 1495 zone, as I mentioned before. And that is really the lesson here, is that continuation is identifiable. And once it's confirmed, we need to know how to execute. And if we were, unfortunate to be on the wrong side of the market, it doesn't mean we can't get on the right side, keep our mental framework intact and gain our profits back. And most importantly, make more profits. And that's the whole idea here, folks. So I hope you found this video enjoyable. I hope that everything that you're seeing is making some sense. If not, please feel free to reach out to me. Hit that subscribe button. This is now the new channel, Profiteer. So me and my colleagues will be working on this channel day to day to develop a better production value for you guys. And hope to see you all soon.